Property everywhere across Australia is going to crash and fall by 25% this year. Wait, no, it's not. If you're interested in actual data-driven property decision making, that's what we're going to go through in this video, because there's so much scaremongering out there, so much misinformation, so many people, creating a hyperbole of what is really going on in the property market that it's just confusing everyone. So in this video, we'll just go through 10 minutes of data. So you can put aside the fear-mongering, put aside the misinformation, and make decisions based on actually how the Australian market is performing now and how it will likely to perform in the next 1 or 2 years. If that's what you're interested in, continue watching. My name's PK, and I'm not going to do my intro. You guys know who I am. Let's just get straight into the data. All of this is CoreLogic, RBA, APRA, and ASX data. This first chart, okay, and by the way, do me a favor, hit the subscribe button, turn the notification bell on, and give this video a thumbs up. Data. I'd super appreciate it. Everyone's got an opinion. I have zero opinion. I'm just going to share with you what's actually happening in the Australian property market. So residential real estate underpins Australia's wealth. There's about 10 charts I'm going to go through today, so stick with me. The first thing I'm going to point out is that there's almost $10 trillion worth of wealth tied up in residential real estate, completely eclipsing the superannuation amount, total ASX stocks, and commercial real estate. And the thing I want to point out here is outstanding mortgage debt in Australia is 2.1 trillion. So based on this, about 20% of Australian residential real estate has a mortgage against it. So everyone who's crying foul saying that everything is going to crash and burn, Australian property market is going to crash and fall by 40% everywhere, it doesn't matter where you think about, well, only 20% of that wealth is actually got any debt tied to it. I won't make any other further statements on that. Let's move on. Okay, so clearly in the last 12 months, property prices have done very well. Okay, and what's this? In the last 3 months, national home values have risen 1.1%. That's to May. Okay, yes, it's the lowest quarterly growth rate since a couple of years ago, but extrapolate that if you want to, times 4, 3 times 4 equals 12 months in a year, that's still close to 5%. And that's just at a national level. That includes all the terrible places potentially to invest right now, like Melbourne and Sydney. The second thing I want to take you through that I'll be covering more on and expanding more on is that the lower value segments continue to lead growth. So what's happening is that affordable property, cheap property, under $500,000, those are the types of properties across Australia that are rising in value, and it's the expensive ones that are falling. I talked about this 6 months ago, I talked about this a year ago, I'll link those videos right now, but hey, some of my predictions are actually right. Let's go into more detail. So last 3 month value changes. So what you can see here is that Australia, like I mentioned before, has risen by 1.1% in the last 3 months. And remember, in the last 3 months, we've had an interest rate rise, and more importantly, we've had consumer sentiment come down. We've had people realize that interest rates will go up, but yet property prices nationally continue to go up. Now, I'm not saying that's going to continue by any with a blindfold on, far from it, but this is just the stats so far. Combined regionals in the last 3 months have gone up 3.6%. Extrapolate that times 4 to 12 months, you're looking at a double-digit property price growth in Australian regional centres, not capital cities so much. Northern Territory, everywhere has gone up, okay, except for Melbourne, Sydney. And hey, isn't that what I've been talking about for the last 6 months? It's not that all of a sudden I've changed my tune and say, guys, I got it wrong. Sydney, Melbourne are dropping. News to me, news to you. I've been talking about this. I've done a video, I'll link it right here, 8 months ago, talking about how Sydney was a potential disaster for property investors. Let's carry on. 12-month changes. I'm not going to dwell on this. Everyone knows that property's done well over the 12 months, but obviously past performance doesn't dictate future performance. Here's something I do want to dive deep on. Capital city performance. So what you're seeing here is that the dark purple, this purple line here, that's Sydney, and the light purple is Melbourne. So that they've had their day in the sun, guys. Like you've made a lot of money if you're in Sydney, Melbourne. Well done. Now it's maybe time to look elsewhere to invest your money. All right, property prices coming down. However, Sydney and Melbourne, surprisingly, and surprise, surprise, there's more to Australia than Sydney, Melbourne. Adelaide, check this out. This yellow orange line, it continues to grow. All right, it continues to grow really, really strongly. And so does Brisbane, according to this, although that rate of growth for Brisbane is just tapering down. Okay, so, and Perth, check this out. It's this maroon or red line. That rate of growth is increasing. Okay, so property prices aren't necessarily on a free fall everywhere across Australia. I know those headlines, the Sydney Morning Herald or news.com, property prices in free fall, mortgage arrears, hitting new records. Actually, the number of people defaulting on their mortgages is at a record low and dropping. This is the stuff that you don't necessarily find out because the media like to sell you clicks. All right. And this is really interesting chart. I really want you guys to understand it. I know not everyone likes data, but you got to like data if you want to actually demystify what's going on. Now, 6 months ago, 12 months ago, and when I've done these types of updates before, you'll remember or go back and watch those videos. You will have seen that the more expensive properties per city were the ones 6 months ago, 12 months ago, increasing the most. Okay, so 25th percentile, 50th percentile, and 75th percentile. In other words, in any city, this is the 25% less expensive property or least expensive property. Here's your average property, and your more expensive property, 70th percentile. So in Brisbane, what you're seeing is that these cheaper properties in the 25th percentile, the bottom 25th percentile, those are the ones increasing in value the most. And the really expensive properties, those are the ones that are increasing the least in value. Okay? And 12 months ago or 6 months ago, I made the prediction that this would happen because back then it was this dark purple, the most expensive properties that were rising the most, and the cheap properties were not rising. And in any property cycle, it's always or mostly the expensive part of the market above $800 million that rises first, and then it's the middle market, and then it's the affordable. All right, so in Melbourne and Sydney, the same was the case. It's these really expensive properties, 75th percentile onwards. In Melbourne, Sydney, we're talking $2 million plus properties that already grew by 30%, and now they're leading the charge in terms of falling. Okay, really, really interesting. Adelaide, similar type of dynamic. However, Adelaide is earlier in its property growth cycle than a place like Brisbane or other places like Sydney, Melbourne. So here it's pretty even across the board. And in 6 months' time, you'll probably see that this dark purple comes down and the light purple and this medium purple go up. Okay, Perth is really interesting as well. Across the board, property prices are rising, and love to invest in these cheaper properties because for now, they're still positive cash flow despite the higher capital, higher interest rates, I should say. So these have been our key, hunting grounds as well as regional. And here's what you can see for Hobart. So expensive properties falling, ACT, they'll start falling too. You'll probably see in a couple of months' time that these expensive segment of the market in ACT starts falling. All right, let's now go through city by city for another 5 minutes. Stick with me. So Sydney, okay, so this is what the media, this is what your colleagues, this is what your friends, this is what your friend groups on Facebook, this is what people are saying, house prices in free fall, tumbling, crashing, whatever you want to call it. It's a whole bunch of 1% drop in Sydney. All right. Now that's going to continue. Don't get me wrong. I think Sydney might fall by 10 to 20%, but that's after a growth of well over 40%. Now we're not investing in Sydney anyway. I think we bought when I say we, I mean my clients, they bought their last Sydney property probably early last year. Okay. We don't want to buy at the top of the cycle, but yeah, it's definitely falling. There's no doubt about it. Melbourne is not too dissimilar, but even that, even though we've not invested in Melbourne for more than a year, the point that I want to make is there are still suburbs in Melbourne that aren't falling. There are really good parts of Melbourne, like Toorak, who have already fallen like 5-7%. And then there are other parts of Melbourne that haven't yet fallen. Always markets within markets. But overall, Melbourne, if you're in Melbourne, Western Melbourne, Eastern Melbourne, Northern Melbourne, if you want to invest in property, which, it's always a good idea to build wealth, right? Maybe do it interstate. Maybe look beyond your backyard. Same with Sydney. Brisbane, now I say again, I said on my last video, we are not, by and large, except for some specific exceptions, investing in freestanding houses in Brisbane anymore. We do not want to buy a property that has already gone up 60-70% in the last 1 or 2 or 3 years. I just don't want to do that. I don't want my clients to go through that either. We want to be buying in other locations across Australia, but Brisbane property prices continue to go up. Okay, so fear not. There are other places in Australia in the property market apart from Sydney and Melbourne. In the last quarter, they've gone up 5%. Almost 30%. So they're a record high. It's a pretty risky time to be putting in $1 or $2 million in Brisbane property. And none of this is financial advice, but I wouldn't be doing that myself. I would be splitting that 1 million and buying 2 500K or maybe 3 350K, 400K type-ish properties elsewhere. Okay. Adelaide is an amazing place that I've talked about millions of times on this channel. We probably invested in more than 200, 250 properties in Adelaide, and it's still going really well. People are just finding out about Adelaide now. Like, how can that be? We were investing there starting 2 or 3 years ago, and now it may not be the best time, from a timing perspective to buy in Adelaide, but if you already have a property, it's still going to go gangbusters. I know a whole bunch of buyers agents, many that you hear from on YouTube, who are buying, hugely in Adelaide. For mine, there are some select pockets that you can still buy, but for me, and none of this is financial advice, just because it's cheap, let's say the Elizabeth region in Adelaide, doesn't mean that you should buy there. There are other things to look at, except for the fact that it is a capital city and it's cheap. We want to look at other more important and more diverse data factors. But here, once again, this is not Melbourne, Sydney. Property prices still going up. Perth, I love it. I love it. I love it. I remember probably like exactly a year ago, 18 months ago, we started buying in Perth. And I remember some buyers agents and, there are other buyers agents who have, started their YouTube channels now on YouTube, and they're following my type of content. They're trying to replicate this kind of content. And they came out and said a year ago, 2 years ago, that Perth is not a good time to buy, that Perth is too exposed to mining, that there's too much supply, population isn't rising, all of this stuff. They talk about data a lot, but they don't actually understand data. And in that time, we bought a whole bunch of properties in parts of Perth. And, we're not buying in all those parts of Perth anymore, but they've all gone up by $100,000, $150,000. Now, it's not some sort of magic that we know of, but I'm just trying to demonstrate when you pick a market early, the early bird gets the worm. And this is continuing to increase in price. Now, overall, Perth is very patchy. You can't just buy anywhere. There are some areas that were going down, right now going down, and there's other areas where it's hard to buy a property even if you wanted to, markets within markets. But once again, it's not Melbourne, Sydney. Property prices are not going down. However, they have started to go down in Hobart. I've got Hobart wrong. I'll be honest with you. I'll put my hand up. I thought 2 years ago Hobart prices were overvalued. I got that wrong. Since that time, property prices in Hobart have gone up another 20-30%. I'm not perfect, far from it. So therefore, we've basically not bought in Hobart for the last 2 years, but we started buying there in 2015-16, thereabouts. So there's plenty of value or plenty of upside that we've achieved. But once again, I'll repeat what I accidentally must have said 2 years ago or a year ago as well. This is probably not the right time to be buying in Hobart. There is a rental crisis. Yes, there's a rental crisis everywhere in Australia. In fact, rents are going up almost every part of Australia. So when people talk about a housing crisis, you have to delineate or distinguish that from the price of houses and the rental market. Even if your house price goes down, let's say in Sydney, Melbourne, your rents are actually going up. In many instances, more than offsetting the interest rate rises. Okay, two different markets. In Hobart, rental crisis rents are going up hugely. However, house prices have started to fall, and I think they will continue to fall. So just to cap it off here, last two cities. Now, of course, there's other buyers agents who are getting mesmerized like a firefly towards a lamp, and saying Darwin is cheap. I've seen other YouTube videos on this kind of thing. Darwin's cheap, the data's getting better. But why invest in a location where one or two suburbs may be investment worthy, but the general tide is going away? And here in May, Darwin property prices fell. If you type in Darwin property, you'll find other YouTubers saying how Darwin is great and all that sort of stuff. I just don't want to buy in a place where property prices are falling. And Canberra, I loved Canberra. I love buying affordable price property in Canberra, sub $500,000, even up to a couple of years ago. Freestanding here I'm talking about, even places like far out in Canberra, like Charnswood and places like that. People were saying, low socioeconomic, high crime rates. When you plot crime rates and capital growth for a place like Charnwood or in Canberra's, fringe suburb, northwest, over 30 years, you don't see any correlation. Crime does not necessarily have any correlation to capital growth. Check out Mount Druitt, check out Frankston in Melbourne, Mount Druitt in Sydney. Okay, so we were buying in those areas and they've almost doubled in price, but now is not the time to be buying in Canberra. Property prices started to come down, started to become really unaffordable, and land tax is obviously an issue there. Okay, so to cap it off, you'll see in the last couple of years, it was really easy to make money in property. Let's be honest. Yes, you could have done my course and outperformed the market by 10, 20%, but even if you didn't do my course and just, put a blindfold on, you probably made money in property, right? Like, let's call a spade a spade. Now we're entering into, I wouldn't say uncharted territories, but much more choppy waters, where if you don't tack right, if you don't have your rudder in the right position, if you don't have your sail angled right, your mast hoist, if you don't know how to sail your ship, you could get things really wrong. Now, this is the point onwards where not everything will grow. There's going to be markets within markets. There always has been 15,000 suburbs in Australia, but now the data will really allow the cream to rise to the top. People who actually know what they're doing based on data, not necessarily just professionals who've become buyers agents in the last 1 or 2 years because of the property boom, exited their 9 to 5, but people who know how to read data, everyday average people who are willing to learn. It's these people who will make money in the next few years in property, not the general consensus, not the herd. Okay, if you're a buffalo amongst 10,000 other buffaloes, you're probably going to lose money in property in the next couple of years. It's choppy waters. The media headline is going to say everything is free falling, just like I've demonstrated in this video. Not everything is free falling. Some parts of Australia are free falling. Just so happens to be that there are like the bigger parts of Australia, like Sydney, Melbourne, and so therefore the averages will come down. So see through it, see the forest from the trees. This was real data, okay? It's uncensored. This is from Core Logic, not cherry-picked, okay? Not cherry-picked for some media article. Make your own decisions. Invest not in real estate, first of all, but invest in your education. The real estate between your 2 ears, that's 6 inches, is far more important than any real estate in Australia. Invest in that real estate first. Links below to the Facebook group, more than 16,000 people, links below to my podcast, and really step up your knowledge and then invest. I don't honestly care if you do my course or not, right? But do something, because you can still get ahead financially. Right now, I'm speaking in June 2022. None of this is financial advice, but give yourself financial advice through education. My name's PK. Hit the subscribe button, turn the notification bell on, and yeah, I wish you all the very best, guys. Catch you later. Bye.